Hey guys, what's up? Hitori here. Welcome to episode 36 of the weekly market outlook with TraxProp. In this episode, I'll be covering the DXY, USDCAD, gold, US indices like the S&P 500, NASDAQ, Dow Jones, and also Bitcoin. If you have any other asset classes you'd like me to cover, just leave a comment down below, or even better, you can join our free Discord channel right here. You can talk to me as well as the TraxProp team. If you have any other inquiries or questions, we have people here to assist you. Just go onto our website, traxprop.com, look at how great it looks, and on the front page there will be a button right here that will redirect you to our Discord channel and Discord server around here. Alright, so that's how you can get in touch with us. But before I get into the video, I just want to say that I missed, or at least I couldn't do last week's forecast because my voice was horrendously down bad. You can actually hear it right now, so it's not recovered yet, which is why I had to give it a miss basically. For those that know or have watched the previous forecast, you probably know I don't sound like this at all. This is not how I normally sound like. But because of my throat, I actually caught sinus. The sinus backflowed from my nose into my throat, which is why I'm having a hard time talking. My sore throat is off the charts right now, bearish on sore throat. But you know, that's just not an excuse, but I'm glad I have enough of a voice to give you a forecast this week at least. Alright, so before I get into, you know, sort of like Bitcoin, I kind of want to just give you like a recap of what we saw last week. And let me just go to Forex Factory right here. So right here we are. So essentially I'm just gonna give you like a bit of a recap of the news releases we saw last week on the US markets. Essentially, when people, at least they want to look at the markets in terms of a fundamental approach, you kind of need to keep an eye on these metrics and kind of note them down every single time. You could use an Excel file, or you could use a third-party software to keep track of these data releases, because you kind of need all of them added up together to kind of showcase to you that, you know, you have a clear idea on what the market's at least, you know, looking like. Because with so many metrics, it's kind of hard to keep track, but you know, it's something that you have to still keep track if you are planning to look at things from an approach of the fundamental side of things, right? But essentially, you know, last week we had consumer confidence, right? We had the federal funds rate. This was the big one, but the impact was kind of little because it remained unchanged from last time, and also it was kind of came in line with the forecast, which is why people were like, you know, it's probably priced in already. Hence, when we go on the charts, there wasn't really much of a movement that could, you know, pivot the market in either a bullish or a bearish direction. Things were pretty much stagnant. But as you all know, you know, I think the Fed is going to be slightly, or at least a lot more cautious, right? They've said that multiple times now. Looking at how strong the US economy is, they're going to be very, very cautious in cutting rates. So, and I mean, analysts still expect, right, like 2 to 3 rate cuts this year, but you know, that will come and we'll see if that actually happens. But as of now, I'm still in line with expecting a few rate cuts this year. Alright, but just a recap, last week this one was kind of stagnant, not much changes, didn't really impact the market in any major way. We also saw GDP come out, which is slightly weak, you know, but not enough exactly to kind of change the market direction. This is not a really huge change, although we are below forecast and we are below the previous GDP growth. I think if we have the next report come out as negative, that would be kind of concerning, in the sense that might signal red flags that we might be heading into a recession, or we might already be in a recession. But you know, we'll see that when it actually comes out. We actually also saw PC price index coming out. It came out flat, you know, which is in line with the expectations right here at 0.2%. It kind of just suggests that inflation is not worsening significantly. It's not crazy. So that's great for traders, that trade certain asset classes like stocks, because it means that people are in a more, risk on environment, meaning money will likely flow from cash or bonds or treasury yields into higher risk things like, stocks, or maybe even gold, for example. But jobs data, in the previous reports, they also remained strong, and retail sales is also still showing resilience. So overall, I'd say the US economy is very, very strong. As of now, a risk-on approach is what you should be looking at. It's a bit more viable until a few important economic factors or indicators, they turn negative. I won't be looking to be bearish on the dollar as of now, right? So last week on the technicals, at least, we saw price kind of dip lower below this area of support, came into this area of, some people might call this a accumulation. It's just three small body candlesticks, so you could call this an area of accumulation, whatever. But came into this area of resistance, broken, become support, tapped it, and then it continued higher. And now we've broken above this prior area of resistance from last week. Monday it tapped down, Tuesday, Wednesday, Thursday expanded the week higher. So it was a very, very bullish week for that dollar, and we've broken above this area. So since I am still bullish on the dollar until now, I think that there's a high possibility that we could get in line with this long idea all the way up into maybe 109 right here. Ideally, I would like a pullback to form some kind of structure before continuing higher. As of now, there really isn't any structure to base things off of, but a pullback could be good, or you could risk smaller on your initial position to captivate on this long to go higher on some lower time frame confirmations, maybe the 4-hour, maybe the 1-hour. You could also enter on the open, low, high, close candlestick if it presents itself, right? So that's what I'm looking at for the DXY. Let's take a look at the S&P 500. Last week on the indices, we kind of saw a pretty volatile week, right? We saw price kind of had this large tank, not just on the S&P, but also on the NASDAQ as well. If I can pull that up right here, we saw like I think it's like a 5, that we dipped like almost 5%, but then we ultimately retraced up down to like 2% on Monday, and then we kind of just saw this V-shaped rebound move right here. This movement on Monday was mainly caused by DeepSeek related news, but obviously this large rebound and very quick rebound is expected when the market just tanks or rises in reaction to just random news releases, right? So I'd say this drop was only possible because that drop in the opening kind of magnified the panic, and people were like, oh my god, it's a bearish sentiment. Everyone's, it's kind of like a knee-jerk reaction where everyone's just like, oh, going bearish on something, and it just like tanks. And then when people start to realize that it's not as bad as it seems, all this heavy selling was pretty much absorbed, and people down here were like, you know what, everything's still bullish on the long run in the US dollar and in the US economy. Why would I be looking to short anything really? So we saw this quick rebound higher. Okay, so this is kind of like a sentiment, or this entire pattern right here is kind of like a it's kind of like a common theme in a bull market, right? Because dips are short-lived, often based on reaction to news, and then you have really strong rallies and recoveries after that. It's a very tight window to get involved into a long down here to go higher. So this kind of just reaffirms that we are still indeed in a bullish market, right? This is actually, if you look at if we look at just the other asset classes as well, not asset, but the other indices, we also have the same reaction. Maybe not quite on the Dow Jones, but definitely the S&P 500 and the NASDAQ did take a hit on Monday, but we recovered really quickly. So markets are still in an uptrend, right? We are still in an uptrend. We're still bullish. This dip did kind of eat out a lot of market space right here, and then after that we kind of just ranged the remainder of the day. So as of now, I think there's a high possibility that we could find some area of support around 6022 based off the ONDA data feed right here, and we could continue to just range within this area right here of around 1,000 ticks. So we could continue to range, but then long term I should expect price to reach up into some of these new all-time highs right here in 25 increments. So I'm expecting price to reach into some of these areas right here before showcasing a reaction lower. But if we do manage to kind of break beneath this area, I do think we could take out some of these wicks right here, potentially even filling this wick at 5920, and then seeing a rebound higher once we form some kind of support structure. Okay, that's what I'm looking at for the S&P 500. I think for the NASDAQ, we're also seeing a pretty similar picture, right? We just have this large range right here in this area, and this dip kind of just signified that we're gonna come down into some of these areas of support, tap it, go higher. The issue is that we could be seeing some kind of trend line being formed right here on the NASDAQ. So if we do break out of this trend line, I think we are just gonna reach up to make all-time highs in one fell swoop, seeing how most of these highs are quite closely linked to one another, and we have smooth highs lined up right here. But anything within this range is pretty hard to trade on a daily. There's not much. You would have to go down to like the 4-hour or the 1 hour to kind of find your structure, but always keep in mind we are ranging on a higher time frame, like the daily, right? So always do keep that in mind right here. Looking at the Dow Jones, we do have a clearer picture as compared to the NASDAQ, but it's a similar picture coming up into all-time highs, very near it, showing some kind of a rejection. We have some kind of weak fill. If we do break beneath this support at 44307, we could see price transfer slower to clear out this wick before forming support and coming all the way up to retarget all-time highs at right around 45, right? So waiting for that to happen. Not sure when it will happen, or if we might see a range, but definitely still bullish on all three major indices. But I'm personally favoring the S&P 500 and the Dow Jones because of just how clear the market structure is, compared to the NASDAQ, right? There's a big range right here on the NASDAQ. Okay, so that's it for the US indices. Just buying on dips when possible, expecting higher prices until the US economy is showcasing potential shift into a bearish sentiment. Okay, next up we have gold. All right, so on gold, we kind of saw price. I mean, we didn't kind of, right? We did see price reaching to all-time highs last week. We came into as high as 28.17 per troy ounce right here, which is crazy. I mean, this surge was largely driven by economic concerns, uncertainty surrounding global geopolitical tensions and investor fears and all that kind of stuff. Normally at this point, many traders or people that invest, they kind of jumped into gold as like a long-term hedge against all of these, market uncertainties, and that's not wrong if you're constantly DCAing into gold ETF or stuff like that. But if you're looking at just trading gold, this run up higher was something that kind of lacked a crazy clear fundamental support. There really wasn't any big news. I think it was more so reactionary rather than actually something that was driven by fundamentals, right? Because typically, gold thrives and is strong in an environment where economies are not doing well. We're seeing downturns and we're seeing currencies weakening in their values. But with US economy showing such strength and it's showing how resilient it is, the justification for such a long-term gold rally just seems a bit iffy, right? It seems a bit uncertain. I think that this bull run, although I was expecting it to reach all-time highs, because we're nearing so close to it, and just seeing this kind of strong higher high higher low formation breaking past all of this triple top formation right here with such momentum, doing a classic break and retest, barely reaching all-time highs and then showing weakness. This is just a classic strength of the market, faking out early sellers and then inducing early sellers, and then the real move happens here, right? And just looking at this from a pure standpoint of fundamentals, there's nothing supporting this rally, which is why I don't think that this will be a long rally. I think it might be short-lived, and most I'm targeting price to come into 2,850 before a bounce lower, but that's optimistic. If you do reach that at all, either way, I do expect the market to showcase and kind of drive lower for now, but I would want price to break beneath at least 27.18 around here with body closure and a retest to respect that level to showcase that we are actually coming lower, right? Because as of now, there is nothing kind of signifying that we are going to be seeing a bullish gold run, right? There's quite frankly nothing supporting this rally. It's a bit suspicious, I think. Yeah, so definitely just waiting to see when this happens, because like I said, the Fed is cautious in doing rate cuts, right? And it's actually concluded its easing cycle. So with how high gold has surged, last year, it surged I think like around 27% last year. This is going to be quite a challenge for gold to maintain such a high value, right? Even though this high was expected to be ran, do expect a bearish retracement at least in some form, instead of just blatantly going long thinking it will make crazy new all-time highs once again. Kind of you have to look at just the backings about like as to why gold is running the way it is. Okay. Alright, so next up, we have a new pair I want to go through, which is UCAD. So UCAD actually broke above this pretty long area of range for around like 41 days. Not that long, it's like for a month, but we've been steadily bullish because everything that's pinned against the dollar is pretty much bearish, right? So we've been pretty bullish and we kind of like stagnated around here, and then now we're seeing a push up. This candlestick on a daily was a bit suspicious, but this one was good. We had a strong pin bar, or at least a long wick rejection to the downside, and then we're seeing that body closure above that area of previous range, which is why I think that this is a good time for people or traders to look into potential long ideas on UCAD once we maybe do a retracement lower, retest that range and come higher. I think that's a good area for us to capitalize longs up into at least 1.46. Looking left, that is clean range. These wicks are in the way, but that's about it. And I think we're going to retest these highs right here. Alright, because everything that's pinned against the USD is kind of dying right now. So this is a pretty clear cut of just trend following, right? Some people call this a bull flag, but really is just market going up, stagnating, just waiting for sentiment going sideways and then breaking. And once we see some clear data that one side will be favored over the other, essentially. So yep, that's pretty much it for UCAD. Next up, last but not least, we also have Bitcoin. So Bitcoin is pretty much going nowhere right now. Just pin this up. We're pretty much just respecting this area right here of around 100k to 102 right here, just supporting this previous resistance, breaks become support, and we're just pretty much just ranging around this area, right? Bitcoin is still trading strongly, even though it doesn't seem like it is still respecting. I mean, like, we broke all-time highs consistently right here, and we had this slight pullback, and now boom, broke it, wicked it, came down, and we're still holding right here, drawing a fib from range low to range high. Price tapped into the 50% of this range, and now we're just holding that level, right? So as of now, definitely still seeing that since we are in a risk on environment, I'm definitely also still bullish on things like crypto, especially when the people or investors see it as like a high risk, high reward type stuff. I'm still bullish on it, so I'm still expecting price to reach into this level, or at least respect it, to come back up to actually take 109k with momentum. I don't want something like this to happen again. I want a clear break above that level and then to close above it, showcasing momentum, if possible a retest after that, and then a continued push higher, right? So that's what I'm waiting for. Yep, that's pretty much it for this week's forecast. My voice is dying. I've been taking random pauses throughout the day. I mean, throughout the session, really, and then just hoping it recovers in time for me to continue talking in this video. So, yep, take care, stay safe. I will talk to you guys in the next one. Peace.